Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It's Tuesday. Well, we got kind of a little bit, well, treasuries are higher today. Let's just start there. I mean, when I come here and I look, they're coming down. Ninja Trader is telling me it's time to roll over my 10-year, but I don't think that that's the case yet, but we'll go and take a look at that. All right, so coming over to the chart, you can see, so yesterday, pretty good downward movement overnight, but we didn't get a whole lot during the regular session, maybe about 2 basis points. And now we're about 2 to 4 basis points higher here in the Treasury, with the 10-year sitting at 3.08. So that's kind of interesting. And the S&P 500 hasn't really actually moved a whole lot in response. But I mean, there has been stuff going on in bond world and in Europe. So we shouldn't be surprised if it goes completely the opposite. If that makes sense, right? If overnight was pressured to the downside in the treasuries, but then here during the US session, it's pressured to the upside, right? Coming over here looking at oil. Oil had a really good day yesterday, but it is giving up almost all of those gains this morning. And then we got gold and silver. Well, gold and silver made a good recovery yesterday, but it's still pretty yuck. And then copper I'm concerned about here. Copper, looking to the downside, we get below 3.54. Some new lows that might, well, I wonder how the market might react to some of that. And then we should look over here at the dollar. The dollar, not as strong as yesterday, but still pretty strong at 108.5. And then we got Bitcoin being pressured early yesterday, dropping below 20K once again, but not to new lows and triggering stops in Bitcoin. So that's basically where we're at. I should note the S&P 500 is kind of pointed down at the moment. Let's come over here. We don't really have any US numbers here, the bottom of the hour or any of that, but we do have house price index numbers and CB consumer confidence, US JOLTS job openings. So those are all things that might move our markets. Also, Feds Williams will be speaking about that. Will be basically right at the time that we usually end our stream. Also want to note liquidity not looking so hot today. Yesterday we were 1500s and now it's the like 700s at a lot of these prices. And that is ZNZ. So I don't know what the deal is there with that. Let's come over here to Jigsaw and let's open up another 10-year. Let's see here. I think that the next one is you, right? Yeah, but I don't have it on the wrong screen here. Well, don't worry about it. There's like no liquidity on you. So I don't know why. I don't know why Ninja Trader thinks that the rollover is today. Should fix that. Let's see here. Yeah, September is you. Yeah, so there's not any volume. There isn't really any liquidity in September yet for the micros. Well, the S&P 500 doesn't look super good at the moment, does it? Didn't really get anything too negative sounding when I was going through my futures balance Kashkari unhappy as post Jackson Hole route fizzles. I mean, it was up yesterday, or there was up overnight. I guess that this downward tilt in ES is just a retracement of what happened overnight, right? Let's go back to the chart here. ES. Yeah, it was a little bit of a rise, but I guess part of the problem here is that this move down was so big that it's kind of distorting my perception of things. But Treasury down at the moment. Oh, we have Fed speakers right now, do we? Okay. ECB's not leaning towards a 75 basis point hike in November. Or sorry, September. In September. Let's see here. Conspiracy theorists can appear guarded, distrustful, and skeptical, but as Bitcoin anti-vaxologism and Russian disinformation has shown, they are monstrously naive and very easy to scam. I think that is largely true. I mean, I think it's one thing to look at everything on the internet and think that some of these theories and stories that are out there are maybe interesting or compelling, but they have no real solid evidence behind them. And generally speaking, the people I see that are super into it and that like truly believe it are not too bright. Well, they're not too discerning. Let's put it that way. Let's see here. What's Taleb continues. I've seen in a long career thousands of traders / investors go bust. I've never seen a conspiracy theorist survive. You need natural skepticism, a certain reasonable filter. Experiences when you see history running forward, not from snapshots filtered by survival bias. To survive, your mind must resist narratives. That's skepticism. Well, I don't know, man. Why? So, two thoughts on my mind here. Number one, I don't think that Taleb is as independent of a thinker as he thinks he is. He has his own bias, political biases that, and I don't think that he really realizes it. And I see this among many Europeans, that they have very strong opinions of the world and the United States in general. And I don't feel that they have a very good grasp over what's actually going on over here. But then the other thing that's on my mind is, why is the liquidity in the 10-year so darn low? Good morning, Octavius. You have any thoughts? Why is the liquidity in the 10-year so darn low? I'm really surprised and frankly disappointed that the liquidity is so bad today. This is not good. So, seeing the liquidity like that, and we've got like the pace of the Federal Reserve's balance sheet roll off is increasing is not a very good thing. Rollover hangover, I guess. Yeah, so ELT, you're correct. We have the consumer CB consumer confidence at 10 o'clock Eastern time, and then at um, basically 11 o'clock Eastern time, we have Feds Williams. Although we are getting Feds Barkin is speaking at the moment, we also have ECB's not speaking at the moment. So that appears to be moving the market somewhat. I'm starting to notice that the market isn't reacting to Fed speakers as much. I do kind of think that last Friday was maybe a little bit of an overreaction due largely to the equity traders just being having been misled about what the Federal Reserve is doing. So here's what happens is there are a lot of retail traders out there that believe in the efficient market hypothesis. And so their thinking on these matters is I will watch what the market does on FOMC day, and that will tell me what the market thinks about whatever it is that the Federal Reserve just said. So come in and last FOMC day, the markets moved up. And so all of these participants will think, oh, well, that means that the market thinks that the Federal Reserve is about to get dovish and is going to pivot or whatever, right? So the answer is never, oh, well, maybe it was just temporary supply and demand, liquidity constraints, et cetera, right? So then they make all of these conclusions about that the Federal Reserve is going to pivot, and all of the equity traders they buy into it. And meanwhile, everybody over here in bonds knows that the efficient market hypothesis is bunk. Is sitting over here being like, well, I mean, they keep saying that they're going to raise rates, and it's not being reflected in the rates that we've got. Not completely across the curve. So when Powell comes out and he's like, no, like you guys got it wrong. We're not pivoting. What I said before, now I have to be more mean about it. Right. And then the market moves. But anyways, now that they've maybe kind of come back closer into reality, maybe Fed speakers other than Powell, of course, maybe aren't as important. But we'll see. I don't know. Rollover hangover is kind of like a probably the best theory that we have as to why the liquidity in the 10-year is so bad. But something about that kind of rubs me the wrong way. Like I don't think that can be the case. Now one thing is that the balance sheet here in September, the roll off is supposed to be more significant. The treasury is going to be rolling off more this month. Now, I don't necessarily see why that has to be reflected in selling or anything like that. Like they're not going to come out and sell. They're just not going to buy as much at the next auction. But perhaps the reason why this matters is because that means if the dealers don't want to hold as much inventory, right? If the dealers don't want to hold as much inventory, then that means that there's less inventory out there to hedge with positions, and so you're not as likely to do market making with it. So it could be that. If it's that, I mean, if that's the way that it's going, then I have real concerns about where the liquidity is going to be like after a year of this. But it's stupid how dumb the market participants that Powell needs to bully them into selling, and Powell is not any better than them because he himself doesn't know. Well, what I always find astounding. Oh, ECB's not any balance sheet wind down is to be very gradual. Nah, I don't know. I think that the markets may have moved on what one of the speakers said there, but it's unclear to me what exactly they said. Anyways, I just continue to be astounded by how everybody seems to have an opinion, and their opinion is that they would do it better. I just like really the whole thing here is that we are in an economy that really has no real comparison. Up until now, at least, there is no real economy to compare it to. And the data is giving us all sorts of bizarre readings that don't really make much sense. A lot of the economic numbers we've had don't really make much sense. And so the Federal Reserve made a mistake primarily based on not starting to tighten soon enough. I don't think that that mistake was nearly as massive as people are making it out to be. I think it's really weird that people expect the Federal Reserve to be perfect, right? It is a committee that are trying to make the best decision that they can. They're not going to be perfect. Um, and everybody seems to think they'll do better. Is just like really silly. I was watching this video yesterday. I laughed out loud. My wife was like, "Seth, why are you being so loud? You're going to upset the baby." Sorry. But this person on TikTok that is a kind of a modern monetary theorist influencer of sorts. I think they work for the Young Turks, so that kind of tells you where they're at politically, right? And they were like, "Oh no, like we shouldn't have the Federal Reserve System where the Federal Reserve sets interest rates and that determines how much money the banks can run out, and then the banks do loans and everything like that, because the banks will just give it to people that already have businesses. And instead, what should happen is Congress issue should issue debt out directly to people." So basically, they were favoring more government spending because they think, and this is just where it's just like, what the hell can you possibly be thinking? They think that Congress will spend that money better than the banks will. Basically, they think that Congress will allocate that money better than the banks will, which is just like so freaking laughable. But like really, at the end of the day, what it all comes down to is allocation of capital. And if you don't like the current regime, or let's not call it the current regime, like if you don't like the current financial system, really what you're saying is I don't like where the capital has been allocated and I could allocate it better. Right? Which is just such a what is the word? Such an arrogant thing to say. I think the reality is that any one person's ability to really understand this market is extremely limited. And anybody that is acting like they know exactly what's going on and exactly what's happening and that there's a policy prescription that's going to fix everything and they're crazy. Crazy. You don't want to listen to these people. Certainly not for trading. Uh, Never claimed I would do better. I'm just saying that what the Fed does is not working in the solution. I'm not so sure that I agree with that. I mean, I think that the Federal Reserve made a mistake, but I think that so far things are going pretty well. Like, I realize that if central banking didn't exist, we'd probably still be in the midst of a depression, right? Slash societal collapse. Oh, let's see here. Okay, I thought that was Alco has announced that it will shut an aluminum production line due to higher power. Well, this move down is interesting to me. I think that when I came in here, the movement suggested that maybe they were just moving based off of what the Federal Reserve speakers were saying, or maybe it was just natural oscillations. but we have had a decent 8 tick or so down movement. Pretty decent downside order flow in the 30-year in particular. Um, I'm detecting a little bit of a hint that the 5-year wants to steepen, but it's not actually steepening, it's flattening. ECB's vassal saying he supports an interest rate hike that exceeds 50 basis points. So I think that that is meant to say 75, if not 100 basis points. So seems, I mean, it could still be the speakers. I don't know though if I feel like I'm just too late. I really don't like the liquidity conditions is the problem. Yeah, I don't feel particularly great either. I know what the solution is, but I would never say it. Oh boy. Well, so here's the two the when you really think about it, people come down on one of two sides, right? One side is that the politicians should be in charge of it, that the politicians should just spend as much money as they can, right? The other side of it is that the government shouldn't be involved in the interest rate market whatsoever, and that we should just let interest rates float based on what the market thinks. I think that means that there would still be interest rates and things like that, but just that there wouldn't be the federal funds rate is set by the Federal Reserve. There's '06. There was, well, okay, so we're not actually to like overnight lows yet. This '07 area was kind of an area that they had spent some time at earlier. Fed Sparkin says interest rates will need to be restrictive. Wow, they're just blasting through 10 there too. But isn't this what happens to me so often lately, is that when we're getting a good trend, I kind of sit on the side? Hmm. So that last tick there at '06 half kind of reinforces for me how poor the liquidity is right now. If there was a pushback the other direction, it probably wouldn't take much volume at all to move them all the way back up to 117.11. So a continuation trade at this moment, I mean, would given the liquidity conditions, I don't think that it would be crazy to take it at 3.1 and see it go higher. But it's just the pullback could be really nasty. Well, it's already 2 ticks higher. Man, there's a little bit more liquidity there at '05 though. So when I look across the board to like correlated assets, 6J just kind of in line and maybe not quite as aggressive as the 10-year at the moment. Gold's not really moving. And oil still just kind of ranging after having quite a bit of a down move this morning. And the treasury's still not giving me any hints here. The spread in the micro 10-year is actually widened a little bit. Now they're kind of like 3 ticks. Well, then they came back in there for a second. I don't know. Kind of also brings me back to the thing we were talking about before we ended yesterday, which is like I continue to see the internet concerned about like the wrong things. There was a red book. And then at the top of the hour, we'll get like the house price indexes and stuff. So like everybody in the United States wants to buy a house and feels like they can't afford it. And so that's why you get so many people all over the internet saying that like we're in a housing bubble and that it's going to crash. It's going to be just like 2008 and yeah. Plus you tend to over bias towards recent data. So like we're always fighting the last crisis instead of the current crisis, right? When I look at the risks that are out there in the market, I really think that housing is like the pretty far back on the list of things that could go wrong. Like a bunch of different things are probably going to go wrong before the housing market like really, becomes a problem. But that's what people are interested in. Is you can just see it. It's so strong. And I think that there are some situations where we can take advantage of it, that social media really creates attention herding. Everybody's attention gets focused on certain things when they might not actually be where their attention is best spent. Their objective might be different than yours or what they say. Well, so like here's the thing with that I don't think that people understand, or at least when I see like, okay, Elizabeth Warren, for instance, saying, "Oh, the Federal Reserve is going to send us into a recession." No, it's not the Federal Reserve that's sending us into a recession. It's the lack of supply, right? If demand is outpacing supply, then the Federal Reserve has to slow the demand down to stay pace with the supply. And if you want the economy to grow faster, you're going to have to deal with the problems on the supply side, right? It's not really the Federal Reserve in the end. It's all they're doing. All they're doing is ensuring that the market stays in line with certain economic limitations, right? Because the market could continue to push up on its own and just create inflation, and then that leads to like really, really bad problems, right? So instead what they do is they say, no, like we have to stay within these boundaries, right? We can't have inflation go above 2%. Why isn't there more supply though? Well, okay, so there's a couple of reasons. The number one thing that's going on here that you got to realize, NASDAQ killer, is that the world deglobalization is a force, right? So the West is basically trying to cut Russia off completely. China is kind of been siding with Russia a little bit and is So we're kind of getting a little bit of the same thing where people are saying, we shouldn't have our supply chain completely dependent on China, right? And so that requires investment in other places, and that limits your supply and creates inflation, right? So there's that problem is the first one is deglobalization. Then the problem that you have on the political side, or the fiscal side over here rather, is that Congress is misallocating our capital, like grossly misallocating our capital. So for instance, Joe Biden just did this school debt thing. What does that do? Well, that money basically all goes to college endowments, right? Maybe not where we would want it. That's like $300 billion, right? Really, when you look at the amount that's in college endowments, it's a lot more than that. And then Congress, they're doing stimulus and stuff. What are they doing? They're putting it all into these green initiatives that aren't sure things. The war is a superficial. No, it's not. Why the war? Because the Russians are crazy. I know that sounds like a really US centric kind of like approach to it, but the reality is that they're the people in power in Russia, their basic take on the world is that Russia should expand and kill anybody that stands in their way. And Putin is looking at the demographic issue and the trajectory in Russia, and realizing that now might be the only chance that they ever have to accomplish some of those goals. And that's why they're attacking now. Like straight up, that's why they're doing it. Not because of gas. No, I don't think it is because of gas. I think that gas is a reason why Putin thinks that he will be able to get away with it. Basically, his calculation is that the West will not be able to continue supporting Ukraine because of the gas crisis in Europe. Is essentially what his estimation is. Wait for the Fed to give up on, well, but I mean, they're kind of reducing QE right now, right? So another thing that puzzles me, many conspirationists love my idea of bureaucrats being intellectual yet idiots, while at the same time assuming they have the genius to manage a complicated and seamless plot. How can they hold such contradiction? No. Well, that's the interesting thing about it, is that like, this what is he saying? Complicated and seamless plot does not actually require coordination. People's incentives just kind of naturally align up in a way that you could never accomplish with coordination, is what I see over and over again. Okay, now they're gonna head for the overnight lows. How would I know when they even give up? Well, I don't think that the Europe and the United States are likely to give up anytime soon. I highly doubt that Joe Biden will give up. Can you imagine if Joe Biden, oh man, if Joe Biden just all of a sudden decided, well, we can't do this anymore, we're not going to give Ukraine any more aid, after you already gave them billions and billions of dollars, and like your policy fails, right? How would he answer for that politically, right? So Joe Biden, from a political perspective, basically has no choice but to continue doubling down on it over and over again, right? The Europeans might have an out. The Europeans might be able to say, "Well, we just can't afford it," but Biden can't. It really sucks that I've sat by on about 25 ticks, but it always goes up at the end, right? No, it's not. Not that simple. Like this again is the thing that, like, I'm not saying that this is what you think. Yeah, Octavia says there was no pullback to get in. You're correct. Well, I mean, there was a little bit. There was a little bit of a range that formed around, I'm gonna say, '06. Probably. I mean, there is the node in the profile at '06 half, but it kind of looks to this kind of looks to me like large meta order execution. And they didn't really care. Although I think that they may be backing off. I haven't really seen like a really clear liquidity hole form, but I'm going to guess, just based off of timing, that they're done or close to done. But the thing that I find really interesting is, again, everybody gets biased to what recently happened. They're always fighting the last crisis. So basically what's happened is all of the retail traders are sitting here cheering on any kind of downside market that we get, looking for some sort of big crescendo crisis sort of a thing for them to buy it all up, just like 2008, right? Excuse me, my stomach is like equalizing here. Anyways, everybody's sitting there like waiting to buy the bottom and stuff, right? When the current economic situation, I think that the most likely scenario at this point is stagflation, which means that you have, oh geez, you see that stop run? Holy shit! I've not seen one like that. That was like 5,000 contracts. Wow. Well, I think that they're going to tick back up to 04, but holy crap. So if we get stagflation, the most likely scenario here is that interest rates remain high and growth remains low until the problems with our supply constraints are passed. And given that the West is basically really pushing this move to different energy sources, which, by the way, aren't a full win. Oh man, this is one of those things that really bothers me, is that the politicians have basically decided, okay, here is the solution. We're going to go to renewables. Renewables are the solution. And the market was not investing into renewables before the government got involved. Why is that? Because they're not a guaranteed success. There's a lot of problems with them, right? So we're investing all of our money into something that might not work, right? So what happens if well, I guess we're putting all this money into green energy, and what if it plays out just like it did in 2008, and then it's 5 years from now and we're not any closer to solving our energy problems, right? So not only do you have stagflation, but you have stagflation with the potential to last like a whole decade, like a whole lost decade, right? And here everybody's just trying to buy the dip, right? Not that that's a guarantee that that's what's going to happen or that that's a prediction per se. I'm just saying that's one scenario, one that seems the most likely at the moment. And that scenario does not say buy the dip, right? The run was into yesterday's close and open. I've never seen a stop run like that. Have you, Octavius? That was really something else. It's kind of funny to look at the micro yields and not all that much interest in it doing anything, although there was a decent amount of volume at 10.5. Anything you have to threaten extinction level catastrophe to get people to buy into should be suspect out the gate. We should have learned this with Herald Camp. Oh, I'm not sure what you're talking about, Herald Camping. I'll have to look that up. But yeah, I think you're right. I think that, listen, why is the solution not nuclear? Oh, man. So people are like, we cannot, let's see here, Christian radio broadcaster and evangelist. How long have you been trading? Well, I've been an observer of markets since 2008, basically, is when I got involved. But I've been specializing in treasury futures here now for about 5 years. Anyways, if we were serious, it would be nuclear, right? Like if we really went full bore nuclear and we really became efficient with nuclear power, or we got fusion power up, right? Like the amount of energy that we could generate, it would be orders of magnitude above what we have today, right? People are all concerned about how many people can the earth support. Well, like the most conservative estimates that I've seen is that we can't support more than 10 billion people. And based on current demographic trends, the world population is going to decline before that happens. So, and who's to say that the world can't support 1 trillion people with the right technology? What's your thoughts on Goldman's selling announcement on Friday? I'm not sure what you're talking about, Octavius. I don't know what you're talking about. Oh, lots of followers lost their asses buying into his end of times prophecy. Yeah. Well, they did touch 04. So here's the thing. That stop run right there, that's going to form a liquidity hole almost for sure, right? So I probably don't want to touch it for a while. Bet all your 1K savings on it? Wait, what are we betting our savings on, though? It was like this thing yesterday where we were talking about the housing market. It was like, well, I think you guys are concerned about the wrong thing. They're like, well, would you make a bet? I was like, well, what's the bet exactly? That the housing market won't decline 40% from all-time highs? I mean, that one I might be able to take you up on, but yeah, it's heavy. But look, they're putting decent amount of money through at 03 area now. You know what? The other thing about that move is that it was really starting from, well, when we got here, it was like what, 11? When we started, it was 11. We've basically made a beeline for the lows, and then it broke through and there was a big stop run. And the person that had their stop at that location never sat there and said, they're probably going to come for me. Like, this is just a really bizarre trade, to be honest with you. I don't know. Maybe that was somebody was puking this whole time and that last little bit was just the last amount that they had. I don't know. I wonder why the housing prices in China has not become a big topic so far. That is a good question. Um, here's my best theory. Okay. The housing market in China actually ends up being a good thing for the other markets. So it's boosting the dollar. It's causing money to leave China and go to the rest of the world, and it's causing China to pump unreal amounts of money into the system. So it's stimulative, in fact. It's just that the problem is still supply constraints, right? The next QE and rate dump? No. We really are going to have to go into a deep recession to see that happen. You really have to, you realize if you're taking that trade, you're basically betting on a full-on recession that's probably larger than the 2008 crisis happening here in the next 6 months to be taking that trade. Which again, it's not like it's going to happen. It's just that again, that's a lot of arrogance to think that you can predict something that effectively in a market that nobody really truly understands, or rather a market that we understand less of than usual. Put the money where your mouth is? No, why would I? So the whole point here, NASDAQ killer, you're missing the point. The whole point here isn't that I know what it's going to do and that you're going to be wrong. The whole point is that you're arrogant to think that you know that it's going to do that. I'm not going to take a trade on that. My whole thing is if you think that you know what it's going to do, I think that you're probably a little bit delusional. I am, so what? Okay, as long as you understand. As long as you understand. There's definitely a liquidity hole here in the treasury. I wouldn't. I'm not going to discount the whole. Or like again, often what we'll get when we get this move is they'll go into the liquidity hole, and then it'll dump even lower, and then snap back up into the liquidity hole. I don't think that that's this situation. So we'll see. He doesn't. First, last. You got to understand that he is just. He is like macho kind of. You know, I'm always right sort of guy. You know the type. That type can be successful at trading because at least when they are right, they know how to push it and they can make a ton of money when they're right. Yeah. See, the whole thing here is this is actually a really interesting opportunity. So part of my problem is that I don't 100% understand everything that you guys are saying to each other. I think that you've kind of come to this point where you're not really talking to each other. Like you don't think that what you're saying is gonna like help him understand or something like that. And so really you're kind of even like summarizing things just to like uh take hits at each other. Now he's being passive aggressive, sure. Um, but really what we should be trying to learn here is teamwork, right? So here's the first part of teamwork, in my opinion. I don't know. I'm not like effective teamwork methods and so on and so forth. That's not something that I've done a whole lot of study about, right? Maybe we should look up some books on this, okay? But here's something that I found just like in my professional career, right? Is that the first step of teamwork is trying to understand what makes the other person tick, right? So understanding that Nasdaq killer is one is a little bit autistic, and two is kind of a little bit of a macho know-it-all is really useful in helping us deduce how to best use what he says, right? So I kind of always have to take what he says with a little bit of a grain of salt. I apologize. Hey, yeah, okay. This is cool, right? Because we got an opportunity to learn, right? So I kind of look at him like, oh no, he's he definitely is first last. He definitely is. So when we can kind of look at what he says and understand like where he's coming from and where, okay, so I might be able to pull some information out of that, and I can also pull some information about like what certain groups or ideologies in the markets might be doing and how they might be trying to go about it, right? So with the first thing that we can do is if we can understand somebody. So then the next question is, how do we get him on to where he's more useful, right? He's a doom and gloom on edge in life. Yeah. But see, then I can come in and I can say, okay, well, so here are the things that you're saying, and here are where some places where maybe that's not necessarily true, right? I like to talk about it because a lot of the things that Nasdaq Killer is saying right now are actually popular opinions in the market, aren't they? Like the opinion that the Federal Reserve is going to just completely blow things up here in September on October, and then is going to have to reduce interest rates and everybody's going to buy the dip is a popular opinion, right? It's a popular opinion, so it's more interesting for me to talk about it from that perspective, right? Well, Nasdaq Killer, if there's one thing is that a person as strong-headed as you is usually not so willing to back off like that. So I think that kudos to you. I want- now, first and last, here's the thing: is you're being antagonistic towards him now, right? And you're talking about somebody that we've been chatting back and forth now for like 3 or 4 years. So don't be mean to him because uh, you're probably going to have to, you're going to be here chatting with the people here in chat for a long time, right? So we don't want to get on people's bad side. He's just passive aggressive. I actually, first and last, I actually think that what he's doing is he's trying to provide a good conversation here about a key issue in the market, right? What he's doing is he's finding the most popular and controversial topic, and he's throwing bones out there for me to chat about, right? That's what he's really doing. Try and help him realize. Okay, well, so here's the question. What sort of arguments do we think would be the most effective for him? Well, I don't know. The only thing that I know how to do is like point out empirical facts, right? It's good for your channel, I think so. Let's see. What are you saying, Akshay? The most popular opinion that I have come across on Twitter is everyone is bearish, therefore I am bullish. Is that really? The whole rally that we had in August is really an interesting thing to watch on social media, wasn't it? Because of course, I wasn't willing to take any bet on it because here again, I feel like that our ability to predict what's actually going to happen here is much more limited than it usually is. So I'm not looking to make any huge bets. I'm just looking to survive right now, right? But there was so many people were extremely bearish coming into August, and it's come up. They've hated it the whole way. This is very, very much the way that the recovery in 2009 occurred. Was like everybody sold the market because Obama would come out and say stupid things in a press conference every day. While he was doing that, so it would always go down. And then one day they finally wised up and they said, "Oh, we're not going to have the press conference anymore." And that was the day that it turned around. So then you had like a week or two where it was a rally and everybody hated it. They're like, "Oh, it's just short covering. The economy is still terrible. Yada, 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 all of these things." Right. And that was the bottom. Like that was the bottom. Everybody hated that move. I'm not saying that this is a bottom. I'm just saying that it's like the market sentiment is not the only factor in the markets. And because most investors are not sophisticated enough to do a full analysis and look at like what are the flows that are to come through that month and everything, they get caught off guard by these things all the time. So here in November, like it was Octavius, I'm thinking when corporate buybacks end, we will get a sell-off in equities, and September is usually a down month. Yeah, exactly. I think that this last month you saw a lot of money come into indexes, and you had corporate buybacks, and you had and then you had shorts, short sellers covering and everything. There was a lot of data ahead of that suggested that the month was actually going to be up. And it has absolutely nothing to do with whether or not the economy is in a good space or if we're going to go into a deeper recession or not, right? Like, so again, where the market is right now or what direction it moves is not necessarily reflective of all available information. This is the thing that everybody keeps telling you, and that most analysts that you listen to on Twitter and on TV, et cetera, they all believe that's false. They believe that what the market is doing right now is fully reflective of all available information, and it's not. It's not even close. I disagree with you say it's an empirical fact. Well, I don't know if I was so for the specific argument that we're having here. I haven't really used very many empirical facts for it, have I? It's all very speculative. And in what I'm doing instead is I'm giving you like the thorough rundown, right? It's like, here are all of the different scenarios that could possibly happen. I don't necessarily know which one it is, but here are all of the different possibilities, right? And when you go through some of those possibilities, you can kind of like discount some of them. You can kind of look at how one is like the fact that this one is a possibility kind of suggests that this one is not as likely as you think that it is. Because if it was, then this one wouldn't even be on the table. Do you get what I mean? I don't know if I explain that. Sometimes when I say you get what I mean, it's like, well, I think you're stupid and you're not going to understand what I just said. But sometimes it's like, I've never explained that before and I don't know if that was an effective way of explaining it. So I kind of need some feedback from you on what I just said. Right? There's one scenario where in September and October, the market just completely falls apart. The Federal Reserve has to back off and lower interest rates, and everybody goes and buys the dip again, right? Okay. But there's another scenario where the Federal Reserve keeps interest rates high, and maybe we do go into a full-blown recession, but we continue to get inflation, and so the Federal Reserve continues to keep interest rates high. Right? And that is a real possibility. In fact, I suspect that it's the more likely probability at this point, or at least the Federal Reserve thinks that that's the more likely probability right now, right? So that I'm not the one that put that scenario on the table. The Federal Reserve is the one that put that scenario on the table, right? So the very fact that that scenario exists should give you pause about this scenario that like the Federal Reserve is going to have to back off, right? because in the scenario that the Federal Reserve is going to have to back off, there's there must be some flaw in it for this other scenario to even exist. What is that flaw in that scenario? Well, it's that there's going to be that going into a recession will be a deflationary event. That's really what it is, right? Right now, with the way that things have been going, it really hasn't been leading to demand destruction per se. It's like demand is moderated back to maybe what it should be without excessive stimulus, but it's still actually quite high, right? It would really take very significant amount of deflationary demand destruction to create this scenario where the Federal Reserve has to back off. So I don't think that people realize that are betting on that scenario, and there are many. I don't think that those people understand how aggressive of a prediction they're actually making. A lot of them think that it's just kind of like, oh, well, of course that's what's going to happen because that's what always has happened in the past. But when you look at the numbers and so forth that to make that happen, you kind of realize that that's actually quite a bold prediction. And it's a very bold prediction just in the context that we're in, where our ability to understand this market is very limited, right? Get what I'm saying? So that's the best argument that I know how to do, is to come in and just say, well, here's some other possibilities, right? I'm not always the most convincing person. I'm trying to work on it, but you know what the problem is? This just comes back to this thing, is that um there are real attention hurting problems in the current marketplace. 2088 to buy through there at 03.5. And we've had about 30,000 contracts traded here in this hole. So we're definitely correct that we were in the hole. Exactly. Bank of America specifically said buyback starts in 7/17. Well, that was, don't you mean July 17th? There was buybacks. I don't know how much there is this month, but I think that the Goldman flow traders were kind of suggesting that this month's positive flows weren't as positive, and the CTAs are kind of all going short. So I think that if you're bearish the S&P 500, I don't know how it's actually going to turn out, but I think that the bears are getting the best opportunity they're going to get right now, right? Initial move in the S&P 500 appears to the downside. Volume very tepid though. Treasury's kind of pushing back here. So I can see some sell side icebergs. There was one at 03.5. There appears to be one at 04 now. So it looks like sellers are getting plenty of liquidity to be able to do their stuff. The clowns are bullish. I don't know if I'd call them clowns, but are there any important economic? Yeah, there is a consumer confidence number at the top of the hour. That'll be fairly significant. And we are going to have the New York Fed president speaking at 11 o'clock. So I actually think that hearing from Williams could be an important thing. So here's the thing you got to remember. Williams is like, there's like two vice chairs, right? There's Williams and then Brainerd, I believe, right? And Williams is also the president of the New York Federal Reserve, which means that he's the one in charge of like the balance sheet runoff and all of those sorts of things. Might be significant that he has a talk scheduled here when people are talking about the balance sheet pace accelerating here, right? Actually, let's come back here and see, what is he actually speaking at? FOMC member John Williams due to speak at an online webinar hosted by the Wall Street Journal. Oh yeah, and the Federal Reserve seems to have developed a very strong relationship with the Wall Street Journal. So, I believe that due to those, so if you guys watched my video on trading the Federal Reserve, by the way, if you have ideas on like changes to the title or the thumbnail to make it attract more traffic, I'm all ears, because that video, I think there's a lot of really good information in that video and it's not doing very well. But, in that video I talk about how do you judge when a member speaking is going to be important, right? So first we've got somebody that we don't hear from very often. He's speaking at a webinar where there's audience questions expected. So you get a lot of unexpected kind of comments. And then it's at a time when the Federal Reserve has a message that it wants to get out, and the Federal Reserve Bank of New York specifically probably has a message that they want to get out. So there's a very high probability, based on the heuristics that I use, that FOMC member John Williams will move markets when he speaks at 11 o'clock Eastern time. So I won't be around for that. I won't be trading it, but I'm definitely going to be watching, or I'll watch it on replay or whatever, because that could be significant to the markets. But we're getting a little bit more significant of a pullback here now in the treasuries. So I hope that any of you that were sitting here and were like, oh, that stop run was crazy, that makes me want to go short. And I said, well, you probably got a liquidity hole here, so you don't want to get in a trade now. Hope you watch that and then go, oh, Seth knows something. That's probably the best, most reliable edge that I have right here. So when you see the liquidity hole form, you don't really want to open positions there. Can you explain a liquidity hole, please? Yes. So I have a video that goes into more detail on this, called The Stylized Behavior of Markets. The thumbnail is like 5 proven market behaviors. But basically what happens is this. There can be areas where the latent liquidity, and when I say latent liquidity, I mean like you can see resting liquidity. You can see how many orders are sitting out there on the market depth right now, right? 900 contracts, right? But if I trade those 900 contracts and then more comes, and then more comes, and then more comes, right? And so there's like a certain amount of latent liquidity. There's a certain amount of volume that is willing to trade and take a position long or short in that particular location. And if the participants there get their orders filled too quickly, then essentially there's not as much liquidity in that location anymore. Okay. So when you had an event like this, somebody came in and sold like 5,000 contracts all at once, in a crescendo volume selling stop run, right? That is extremely likely to create a liquidity hole. In other words, market makers will have exhausted all of the contracts that they have to take long or short in that location. Okay. And what happens is this, price tends to, if there's not something actively pushing it, okay, price will tend to settle where supply and demand are at their minimum. I'll say that again. If there's no other forces pushing on the market, price will tend to settle where supply and demand are at their minimum, right? I'm trying to go all out here for you because you've been around here for a week, and I don't think you've been around for this discussion, Scott. So if I have, here is supply, right? So there's more people willing to provide supply closer to current price and less further away, right? And then you have demand right here. Okay. So there's kind of this intersection, right? So all of these guys got filled. So now next time, what do you get? You get this right here. It looks like somebody's butt crack, right? So what is this? in the middle. That is where supply and demand are at their minimum because there's not a whole lot of supply. It's not a lot of people willing to put limit bids out there. There's not a lot of people willing to put limit offers out there. And if you get further away, there's a lot more. And if you get further down, there's a lot more. And so that kind of keeps price in that range, right? Now let's go and see if we can identify this on our chart. So here's our 10-year treasury. I'm going to zoom it in. I'm going to zoom in so it's really big. Okay. So this candle right here, do you see it? This one right here, that was the low. You see that candle? Really big candle. Okay. They took out all of this liquidity in this whole area. And now look at what happens after that. Stuck in a range. Stuck in a range for about 45 minutes. Right. Until they decided to move the other direction. Okay. That is the liquidity hole. Right. So you can see it on a chart. Now you got to be careful with charts because when you see charts, you want to say, okay, so because I see X, now that means that the next move is going to be up or down. Thing is a liquidity hole doesn't necessarily tell you if it's going to go up or down. Okay. Like here we had a meta order. Okay. They created a liquidity hole. They're going to execute a lot of contracts here in this liquidity hole. And then the question is, do they have more contracts to sell? If they have more contracts to sell, then they're going to continue pushing it down. And if they don't, maybe somebody picks it up and takes it the other direction, which is, I think, what we might be seeing right now. This actually may be a little bit more of a rebalancing. But, okay. So it does, but what it does predict is that you're probably going to be stuck in that range for a little while. Right? Something that you see very often is you'll be stuck in a liquidity hole like that, and then there will be another shove back down, and it will get sucked back up into the liquidity hole. So when that happens, I really like to take that reversal. I really like to take that trade right there. Okay. Does that all make sense so far? So now I'm going to come back over here to the 10-year treasury. Now, how do you identify it on the DOM? Okay. So first of all, the first key thing is to understand what kind of actions create liquidity holes, right? So the first one is if you see some sort of a crescendo volume event. In other words, a ton of volume was executed very, very quickly. That has a very high probability of creating a liquidity hole. And that's what happened here today, right? But what you will also see tend to happen is if there's a large meta order pushing, the impact that order has kind of declines as it gets larger. Like there's an upper limit basically to how much impact a large order can have. And so you'll kind of see you'll see a pattern like this, these kind of curves, right? Or to the downside. And then it'll kind of get stuck in that area. Okay, so that's the other thing that can kind of create a liquidity hole is basically it's been in that area for a long time, right? It's kind of funny because a liquidity hole basically means if they're going to spend some time in there, that very often ends up becoming the point of control. I mean, we traded a bunch of volume there, right? So that's going to be your first sign that there might be a liquidity hole in that location or that there was a liquidity hole in that location in the past is a bump in the volume profile, right? But the thing that I really look for, that was a little exciting. Okay. So the thing that I really look for is look at the inside bid and inside offer. So right now they're 200 by 500, which isn't too bad. Okay. But what we might see is they trade down. Let's just say that they trade down. Okay, they did trade down 400. 400 is too much. Okay. What I'd like to see is they trade down and like only 50 or 100 is on offer. And then they trade up and only, okay, so maybe more like that. Okay, 32, 100, 100, 100, right? They're going back and forth. They've gone back and forth at 0.8 half a couple of times. That's too fast. But I want to see it. It goes down. Hardly anything offered. Sits there for a little bit. Somebody finally takes it the other way. Hardly anything bid. sits there hardly. That's what you're going to see, right? So if I see a really big volume crescendo event, or a big order gets taken out, another way that it happens is there'll just be a really big limit order here that they crash through, right? And then after that, it's trading at that price and not very much is being put on the bid or the offer either direction, right? That's a liquidity hole. So to identify the liquidity hole early, I'm going to see it in the DOM. Going to see it in the DOM. Wish I had done that earlier and we were still down there, and then you would have been able to see that behavior, right? Not very much bid or offer, it ticks. And in the treasury, it's also often very tight range. Like in the treasury, it'll be like they'll trade back and forth at 09.5, but hardly anything goes into 09 and hardly anything goes into 10. He's bringing me a baby again. Yes. He's looking at me. He's like, okay, she's giving me to dad. You got a little bit of dry skin on your nose, bud. What's with that? I wish you guys could see. Like, I'm going to try here. Wish you could see his eyes. Are just the wildest thing. Oh, wow, you can see him. Look at that. Look at his eyes, guys. Isn't that crazy? They're just gray eyes. Thanks for the explanation. You're welcome. So here, let me show you something else, Scott. Since I have the baby now, it's a little bit harder to explain things. So a lot of what I just explained to you there was kind of like my experience based on what we know about the market, right? Basically, I've been able to say, okay, here's a phenomenon that we know exists. What are some things that I can see to kind of see it happen on the DOM, right? So that part you ain't gonna hear anybody else say. Maybe people at banks know that stuff, but really, if you're really interested in this, you should really go to the research first, right? Don't just take my word for it. So if I come over here to my treasure trove of saved empirical studies. Hello, baby. Yeah, we're going to pull up some study. He's looking at me like, what's he doing? It looks like he might be doing something interesting. Are you smiling at me? Are you smiling at me? Yeah. Yes, you are. Yeah. So good boy. Oh, good. This baby smiles way more than the last baby. Scholarly articles. Best. Walrasian. Here we are. Okay, so the study that you want to watch or that you want to read is from Walrus Auctioneer to Continuous Time Double Auctions, a General Dynamic Theory of Supply and Demand by J. Donnier and Jean-Philippe Bouchot. I forget what. Is that John Donnier? I forget. Anyways, Bouchot is my favorite, man. And he kind of explains why this behavior happens. It has to do with the square root law of meta order impact. But anyways, and you see here's kind of the same similar kind of graphs that I was drawing here, right? As here's supply and demand, and here's where they kind of cross, and then these guys in the middle are the ones that get filled. And if you kind of look at that as like a, let's say we do that every 5 minutes, what happens to in the middle where the people got filled? Well, then you get this kind of behavior. And then here you get this, right? So here's like post auction. Here's this area where you get the liquidity hole. Okay. I call it a liquidity hole. I don't know if anybody else calls it that. If you search the internet for liquidity hole, you're probably not going to get many results, right? Anyways, they explain using really sophisticated math why this happens, right? So this is where we get this from. And I show that to you to prove to you that this is like a proven market behavior. How long does it take to form liquidity holes? Because I would expect they happen in every time frame. Well, like I said, there's a couple of different ways that a liquidity hole can form, right? So it can happen within just a few minutes, right? But when you're getting a strong meta order, somebody pushing the market consistently in one direction, right? Eventually they're going to form a liquidity hole. In fact, the way that these block traders trade is they want to create the liquidity hole because they can actually slip more volume into that liquidity hole. So by creating the liquidity hole, they actually improve their execution, right? But I don't think that you can look at it from like, oh, I should be able to see it on this chart and on this chart. And don't try and do it like technical analysis, right? Because the whole thing here is like the really interesting thing is that there are patterns in the markets. There are like consistent patterns, things that will happen. If you do this thing in this situation, the result will be this. If you give me the orders that I need to execute and the current market conditions, I can predict fairly accurately how the market is going to react to my orders, right? But that requires advanced knowledge of what the orders are going to be. In this case, because I'm going to be the one executing them, right? But you can't come in and you can say, here's what the market condition is, ergo, it's going to do this, right? Because you don't have the whole picture. You still need to know what the future orders are going to be. The future orders could still be up or down, right? So that's why you'll see the market does display certain patterns, but those patterns aren't really helpful for any kind of prediction. You see what I mean? But the patterns do become useful if you know that the order is coming. I mean, we probably could have come in here today and suspected that somebody was going to sell the treasuries. Although with the way that this is kind of played out, because when they started selling, I was a little bit like, I don't know why they're selling it this aggressively. Look, it came all the way back. So, hello, baby. You want to smile for me again? Yeah. You look at the, oh, what's this tears? Are you having allergies like me? Right here. Oh, right there. Say hello. I'll hold him up close one more time. Oh, you okay? He's okay. Oh, his eyes aren't as wide open this time. Earlier, it got a really good shot, didn't we? Here's the thing. You come to this stream. What makes this stream different? There's three things that I think make this stream different. Integrity, excellence, and teamwork. The reason that I trade on the DOM, it's the most excellent way to trade. It's hard. It requires a lot of work, requires a lot of research, but it is, from everything that I've seen, the best way to trade. We practice excellence. See, most people, they come in and they say, well, I'm going to, use the statistics that I learned in high school and I'm going to count the number of times that this happens. And hopefully there's some probability that it's going to go one way or the other, right? But if we go excellence, we're looking for something that can make something exceptionally good, right? Then the next side is teamwork, right? So here I want to come in and I want to teach you guys these things because I really could just keep this information to myself. I want to teach you guys these things because now you're on the same level, right? Now you understand something about the market. Something that frankly I think really washes away a lot of the other nonsense that people pay attention to, right? Now you know what matters, the orders and the current conditions, right? Now you can actually sit here and do the analysis with me, and you can provide insight, and you can you can understand some of the empirical research that's out there and identify new research studies, and hopefully you bring them back and you say, oh, here, I found this one, what do you think about this, right? And then we can find edge together. That's the teamwork part of this stream, right? And then there's integrity. I'm not going to tell you something unless I have a really good amount of evidence to suggest that something is true. Of course, I love to speculate. I'm a speculator, right? Like we were talking about the conspiracy thing earlier. I find conspiracy theories really entertaining, okay? But I'm not going to come in and tell you that it's true and that, you should maybe utilize it in your trading unless I have real empirical evidence suggesting that it's true. So it's not just about, always being truthful with people. It's also about functioning in a manner that people can trust because they know that the information that I'm giving them is going to be backed by science, right? That's what makes us different. So I hope that when you hear on the stream that you recognize that and that you stick around and you continue to build the stream with us. Oh. No, you don't have to stay. You can go back to mom when mom comes back. I think you maybe heard her. Lafta, I was always confronted with where do you get your information? Yeah. Well, I mean, it's such a funny thing in the retail trading industry, right? Because most everything that retail traders are sharing, they learned from other traders, right? Especially now in the world of the internet. It's everybody's just sharing the same things that they saw on Reddit. And like I said, the biggest inefficiency that I see in the market these days, maybe it's not the largest, but the one that sticks out to me is attention herding. Just everybody comes in and focuses in on the same thing. He's mad because I have to keep walking around. When that happens, you can't derive an edge from that. Well, except for maybe trading against it, right? Whereas what we're doing, we're coming in, we're finding like proven empirical stuff that like nobody knows about. I'm literally the only person here on YouTube has any videos about any of this stuff. Proven empirical behavior, incredibly useful to your trading. I'm the only one. And you know what? Like, I should be massively popular because of that, right? But I'm okay flying under the radar a little bit, right? I mean, we do want the channel to do well because the better the channel does, the more resources we have to find even more edge for you guys. I am working on improving our indicators and doing a couple of things on that front, right? But I don't want to be like the most popular YouTube trader or whatever, right? Because that might eliminate our edge. CB has been leading again. They want 137 even. Ooh, really? That could be interesting. Now I haven't checked here on this move. It looks to me like the ZB has, yeah, it flattened out a lot on this move. Like the volume came into the 30-year really strongly. Oh man. And the order flow too was just really interesting. I wonder if somebody took that opportunity to take a fade trade against that. Like maybe somebody was stopping out and then somebody said, well, okay, I'll take this. Okay, he is playing this thing where you have to be walking around or I get upset, so I'm going to walk around. Okay, we're back. How we're doing here. Oh, we lost a few of you. That's okay. This move is a little odd. There's quite a bit of volatility. Oh, so we did get this news here. What was the okay, CB consumer confidence? Oh yeah, that would make you move down, wouldn't it? Okay. So the reason we're moving down is because the consumer confidence was good. And Jolt's jobs openings was also higher than anticipated as well. Yeah, that would be that would be hawkish. Um, very interesting. But it's kind of in the middle of this fraught order flow that we've had here today. I'm a little bit suspicious. So the issue that I see is that since the liquidity was already kind of strained, that they might have formed a liquidity hole at '07, and that if I try and take a trade in this location, that I may end up waiting a little bit longer than I anticipate. Plus, the market's probably going to be chilling until Williams speaks. Although I would expect that anything Feds Williams says to be hawkish. For the moment, they do appear to be pushing up as equities show some weakness. Coming below some of the overnight range, pushing towards yesterday's lows. Oh, actually, I think they are below yesterday's lows now at this point. Let me come back to a chart of the ES here. How come that never saves these charts over here? Go fix this chart. ECB's Mueller is speaking. Yeah. Third ECB person today saying 75 basis points or more. Okay. So we are not quite. So let's say S&P 500 maybe starts breaking below 40K. No relation to the Warhammer of the same name. Well, I had an opportunity to go long 08.5 and I said no. Came back to those 7 hole. That's 5 ticks at least. The question is though, is do they extend beyond that and go back up to 10? I think I'm getting sick here. It might just be allergies, but I'm getting sick here. Let's see here. Mohammed A. El Arian, with a 2-day loss of 4 to 5% following the Fed Chair Powell's Jackson Hole speech, U.S. stocks are now struggling to maintain their early gains. Look at that. Don't like that. Remember, the whole point of Fed communication is to reduce the risk of abrupt market moves that unleash unsettling dynamics of their own. That's quite the volume they're shoving through there at 05. Yeah. if I could have picked it at like 3.080, that would have been a good pick, and I could probably try and let it run from here. 3095 maybe. You went long ES, huh? Well, there is a chance. So there's previous days low. Um, there appears to maybe be some support there. I do think there is a chance that 40K lends some support because of options gamma hedging, right? Ouch. Oh, geez. Some aggressive order flow there. I don't know if they can keep that up though. I'm thinking I'm a little bit too slow to be taking a position here, but I'm gonna put in and see where we go. It does appear we do appear to be getting some more aggressive selling in here, and um given that there was like that big pullback and everything, I think there's a pretty good chance that at the very least we get back to that 03. Although I would say that the latent liquidity has been better on this down move. Like there at 04, it took 1,700 contracts to push down. So we are getting large, but of course the market orders are bigger too. Some interest in this market though. Kind of looks like all of the good spots though I missed. Yeah, bad pick. Markets are a bit icky. High numbers are short and riding the slide. Yeah. What I see right now that worries me is that I believe that the order flows that we're seeing are informed order flows. And while I do see some of the information out there, I don't feel like I have all of the information. And I don't feel like that I'm out in front of it, right? I feel like I'm late to the news, late to react. I feel a little flat footed. I'm not getting the right spots. But again, it hasn't been very long since we were at the 03 to 04 area. So even though there has been some icebergs up in there, I expect that it might be easy for them to push through that eventually. And then if we start to break some lows, I think that you could see a little bit of chaos because there was a decent amount of volume that traded on that up, right? So I think that the liquidity conditions are kind of favorable for us to the downside. And I think that the forthcoming orders should be favorable to us to the downsides. Although that part I'm a little bit more tepid on. Yeah, it's schizo price movement from the lows back to the highs, back to the lows. Yeah. Well, I I don't know what caused that original down move. It might have been partly ECB speakers and stuff. But I think that somebody was just puking. So that initial down move might have been like an overextension because somebody was stopping out, and that's why the pullback was so strong. But the pullback clearly overdid it too, because then we got the economic news that we had today. The CB consumer confidence was better than expected. Those numbers were actually pretty good, pretty darn good, right? So I think that there's reasons for it to be moving, but they seem to be overdoing it on each side. And again, the overall liquidity today is pretty bad. So that's making it a little bit easier for them to move things. So will we get some level break trades here? Mm, maybe not quite yet. It looks like that they are back into the hole at 03.5, but that they don't have the impetus to go below 03 for the moment. ZT the weakest of the bunch? Ooh, I'm sure. Probably would have been better for us to have taken this in the 5-year, but like look at the frickin' spread over there. It's crazy, right? I don't really have the focus to be putting a limit order out there, but I think that you probably put a bid in the 5-year and hope somebody's stupid enough to hit you. Right? Please bring that spread in. Wow, there you go. It's kind of like what we suspected. So there is a little bit of a liquidity hole at 03, but like hardly any liquidity at 02 half 02. There was a little bit, but it only took touching it one time to clear it, and now they're pushing through to new lows. I'm kind of getting this sneaking suspicion now that this could be one of those moves that just goes and goes. Jeez. Okay. So there was a pretty big offer placed there at 01, but then it pulled almost immediately. Yeah, 117 below us, although there's not that much volume at 117. Usually there's decent back and forth at those even prices, though. And then you got 136 in the ZB at the same time. I mean, come on. Hmm. I mean, the offer at 0.005 isn't bad, but there's just not that much volume hitting into evens yet. "17 celebrities just got warning letters about shilling NFTs." Oh boy. Good. I think they want that 17, but there is a little bit of a low pressure area above us. That was a really good break lower, though, wasn't it? I guess Utu kind of the scene of the crime. I'm wondering how much of that was driven by the other ECB speakers also saying, "Oh, we got to do at least 75 basis points." Nice Brigado 2 half. Oh boy. Yeah. You know, I don't know what the deal is um with me and this kind of move. So like that move back down to the lows here. O2 half looked pretty good. Iceberg 563 to take O2, 312 to take O1 half, 497 to take O1, and we'll see if they take a 00 half. But I see that kind of order flow, and I'm just like, man, okay, so 432 to take 00 half. Now we trade into 117 a little bit again. And I'm just so stunned at how easily it comes back to the lows. But then how many times during a downtrend have we seen it do that? Why does it continue to surprise and take me by surprise? You know? Hmm. There is a lot more volume there at 117 even now, though. Speakers today was the announced release of the consolidated financial statements of the Euro system. Oh, I don't know. So the speakers was there have been 3 speakers from the ECB this morning, and basically all 3 of them have said that they're in favor of 75 basis point hike or higher. One of them was he's saying at least 75 basis points, which was like, whoa, okay. So I think that some of this downside has been driven by like, oh, now the ECB is really starting to get aggressively hawkish as well. And I think that something else that's got to be going on here in the markets, well, not, I don't know if that's what's going on at the moment, but something that I'm looking to is that at the top of the hour, we got Feds Williams speaking. And again, I think that the timing of him speaking today might be, you know, suggests that he's got things to say, that he's got some stuff to share. And it's going to be a Q&A with the Wall Street Journal. So you really got he's really going to have the opportunity to say what he thinks about monetary policy, right? So he could say something that really moves the market. And given the way that the Fed speakers have been going, I would anticipate that it's hawkish, right? Of course, we've been surprised before. They say something hawkish, and then the market's like, well, we expected him to be hawkish, so it's actually dovish, and but so you never know. And it might be a little bit too early for them to be anticipating that. It's weird. They don't usually have speakers besides the chairman when they release a financial statement. So, yeah. So, who was the one that was just speaking? What was the one? So, let me go back. ECB's Mueller 6 minutes ago, 75 basis points should be among the options for a September hike via Reuters. Okay. And then we had not was earlier. And who was the other one? Um, Taiwan military fired warning shots for first time at Chinese drone near offshore island. Okay, that's interesting. Actually, I have to go a little bit further back than an hour. Oh, so a lot of that speaking was before that release. Yeah, then we had Fed's Barkin was earlier as well. ECB's not. The other person must have been earlier than that. S&P 500 definitely feeling the rate hikes here today, isn't it? I mean, like they were already kind of down, and then the interest rates started rising even higher, and they took another dive lower in the S&P 500. I think they'll have to hear being short if he's holding that. Who knows? But you've definitely, I mean, and considering when you might have taken it, 40 points already is a lot. But gosh, I mean, the trajectory that they're on right now, NQ down 0.92. That's not that much. Like they could totally have way more downside to go. I'm sure. Barr says he was called an effing loser by Trump at the White House. I'm sure that Donald Trump calls everybody that he's frustrated with at the moment a loser. So I should note, Treasury's kind of sitting there at the lows. The 10-year sitting at the lows. The 30-year, came back of maybe 6 ticks. So we are still getting flattening, and the long end of the curve is not moving as fast. 400 is your 4,000 is your line in the sand. They're awfully close, aren't they? Oh man, like another new low in the S&P 500 could trigger a real cascade of orders, couldn't it? Although I'd have to be careful with one of those because that's the one where it's like, okay, you put your order at 4,000 and you get filled and then it bounces and you're happy, but then there's also this other scenario where it just doesn't even stop and you're like, oh, I should have held on. Mueller isn't with the ECB. He's the governor of the Estonian central bank. Okay. Now, FX Street News, ECB's Mueller. Okay. Well, fair enough. Oh, by the way, I didn't even have myself. We don't even have the music on today. Been so bad at that. Look, there's 31.5. I'd say at this point that the short order flow in the 10-year treasury in particular has shown itself to be quite resilient. Of course there's been pullbacks and everything, but like when the big orders showed up on the bid, they were more than capable of clearing them and pushing lower. And it's been a pretty persistent order flow. So like what I'm seeing right now is no longer consistent with like one, like large meta orders dominating the markets. This is more consistent with just absolutely everybody wanting to go short now, because once you get to that point where like things are just falling apart, it'll just keep going, and you don't really get those pullbacks as much. It seems like that's a little bit more of what's going on. Let's get something a little bit more high energy here, since we are seeing things are going a little south at the moment. Trade your predictions on prices of energy futures used every day for transportation. NC says a CME active trader. Event contracts coming September 19th. Yeah, that'll be interesting. Do you have a list of books that could provide? So the best book I think to read is called Trades, Quotes, and Prices: Markets Under the Microscope by Jean-Philippe Bouchot et al. I need to focus on the order book, so I'm not gonna pop over here and give you a link to it. I have it like bookmarked because people ask this so often. But what that does is that summarizes for you essentially 30 years of market microstructure research and will give you proven market behaviors about how the order flow works. Because a lot of what happens with order flow is that people build these order flow tools and then they treat it like technical analysis. Look, I did it too, right? I come in and I say, okay, so here's the volume profile. What are some patterns that maybe I see in the volume profile? And now all of a sudden you're trading technical analysis. Whereas what you're going to learn in that book are like mathematically proven stylized behaviors. And now those behaviors don't lead to a, okay, when this happens, it's likely to move this direction. Such a thing doesn't exist. But what it does do is it helps you explain why certain behaviors happen so that you can understand what the current conditions are. If you understand the current conditions and you know what the future orders are going to be because you have, some piece of fundamental information that suggests the market's going to move in a certain direction, that's when you can get really good probability. I think that this one is one that's kind of in that vein. I could have taken this a lot earlier. I was thinking of taking it at 3.08 and I kind of sat on it. It was a pussy. So I got to already be up $40, right? When you're doing that, here we had a situation. I'll explain to you here what happened was that somebody stopped out down in here in the 10-year. And then we had a big pullback, and then we had news. So I would expect, because this area, the liquidity is still going to be pretty light. I mean, it wasn't very long since we were down there. It was going to be easy for them to push lower. And now we have Williams speaking at the top of the hour. Everything is just kind of lining up together right now, right? Short. So that's how you can kind of get these like trades where it's like, not only do you have a good probability on them, but you can get them to run a lot further than your losers, right? Because my losers are maybe like 5-10 ticks against me usually. I think my average is actually 15 right now. But my winners are getting like 30, 40, 50, 60. I have one that was 120, right? So what is it? You're combining informed trading with an informed view of order flow. And that's how I would approach it. Fair enough. Found it. Good deal. I gotta warn you, there's like heavy math. Oh geez, that's ugly there. 26.5. There is heavy math in that book, so it's not a light read. Jeez. Okay, so we got to be a little bit careful about what we just saw there, because that could lead to some degree of pullback. I feel like that was a little bit too early for that to be happening. But there must be some people really panicking right now. Oh, okay. Your vibe. You are, man. You're gonna love that book. So I mean, I'm a computer science graduate. I wish I had gotten into this stuff when I was younger. Because when you really get into the book, really what it is it's like how to build a market making algorithm is really what a lot of it comes down to. I mean, I think that was like the initial driver for a lot of that research. But I think that Bouchot does a really good job towards the end of the book of kind of showing you like the higher level, what is the thing that we learn from this? Well, markets aren't informationally efficient, right? Markets could move quite far based off of index rebalancing, for instance. Okay, and they did. Whoa, okay. Oh, I wasn't looking at it. Was it good? Were you guys watching? I'll rewind. Wait, okay. This is why we can do instant replay on YouTube. I missed the drop. Let me see here. I can go back a little bit. A little bit more. Oh, did I have this over here? Okay, here we go. Let's see. Was it a good stop run? Was it a good stop run? Come on. Show me. Okay. First touch. Cleared it pretty easily. Yeah, it was pretty good. Oh, it wasn't bad. Oh, and then that. Oh, yeah. Oh, yeah. Oh, that was nice. That was nice. That'll keep me going for a while. Seeing that. I need my stop runs. It's what keeps the dopamine going. You know, I felt like I was kind of like not getting as much. But here we had some big ones in the treasuries. We got a big one in the S&P 500. Like, life is good right now. Now the question is, can they get a pullback here, or is it just going to settle at 26.5? Seemed like that slip lower in the treasuries was a little bit too far. Air conditioners turned on and it's just like cool air in my lungs. Feels good. Oh no, that was not a very good move right there. Well, I'm worried that they're gonna pump all the way back to 30.5. I mean, the thought had crossed my mind taking profits at $40. But I kind of decided that I didn't want to risk it. That pullback kind of helps. I mean, they could slip lower now if they really wanted to. Wow. The thing again is that, you know, Williams speaking and having a little bit of a profit built up before Williams speaks, I think would be the optimal situation. But I just feel like it dropped a little bit too quickly. Was that below yesterday's lows? Yeah, 28.5 was yesterday's lows. Oh, interesting. And that's right where they're coming back to and having a little bit of trouble. Gold did eventually succumb, as did the 6J. Yeah, 6J very much a part of this downturn. Most of the commodities not doing anything interesting, but nothing on my board is green. It is sell all the things. S&P 500 isn't too bad. Oil down 4.16% though. NASDAQ is now down 1.43. Remember when I said like down negative 0.9? That's not that much, right? It's like there could be way more. I mean, if the interest rates here continue and if Williams really spooks the markets, I wouldn't, you know, count out a 2% to 3% down move in ES by the end of the day. Time for you to go, Scott. Thanks for stopping by. Well, okay, so iceberging at 29, but they were able to take it. We'll see where they settle here. Hmm. Is the said Feds selling to the flight to safety? I don't really think that there's much flight to safety flows coming in. I think that it's all going into cash. Like, look at the dollar. Dollar's pushing 108.87. We could see 109 today, right? It's all going to the dollar. That's where that's where I think some of this stuff gets really ugly, right? Or what can make it really ugly is that it's like everything is going down. There is no place to safe except for going into cash. And cash isn't safe either because inflation has been reducing the value of the dollar. Like, if you're in cash, you are losing purchasing power. So really, in the end, there really is no true safe place. Nowhere to hide. That little beep was just Jigsaw telling me that it couldn't send to their servers for stats. That's okay. You know people pulling their 401ks? Really? You joined a PhD program starting September 1st? I'm jealous. Wait, where? Can you tell me where? Like which program? Because it can be like a quant PhD. I should have stayed in school. I should have taken on as much debt as possible and gotten a PhD is what I should have done. Leiden Uni to the Netherlands. But I mean, like their finance program, they're coming back down here, 28.5. Ugh. 121 to take 28. So, I mean, again, it always comes down to what is the next set of orders. But let's just note that there was a decent amount, maybe 3 to 5,000 contracts that bought since the bottom. And now it's going to fall. It's falling almost halfway back on practically nothing. Oh, mathematics. Okay. Wow. I have a degree in econ or finance to be eligible for a finance PhD here. I could go back and I could go into like a financial mathematics master's, right? I think that I would maybe be able to do that starting from computer science. There was a school sending me emails. The problem is that for me to maintain my cost of living, it would be like $1 million. But hey, I mean, I can take on the debt. It can only be 5% of my discretionary income, right? So wouldn't be too bad of a deal, except for that I would hate myself. I would hate myself for contributing to the problem. So maybe that's not the best idea. I was thinking of doing a natural philosophy. What? Okay. Jim Iorio, these are not unintended consequences. What is he talking about? I don't know what he's talking about. I think it's funny how people in the finance world casually mention the 2 inflationary initiatives the government has undertaken in the last 3 weeks, and no one notes the irony that one is called the Inflation Reduction Act. Or is he just suggesting that the market's falling apart here is not unintended consequences? Well, I really wonder, like the deficit, the government debt, or rather, is now like 150% GDP, something like that. What happens when it gets to 200%? Is that really the theoretical breaking point? Yeah, well, the trader I know with the biggest stack studied philosophy and it was thinking it might be helpful. Oh, that's interesting. Wow, look at them go down to the bottom. Right? So when we were last at the bottom, we were down 7,000, 8,000 contracts. Now we're up 4. So I'm going to say that it was about 3,500 contracts long that might have to puke into the lows. That's not that significant of a factor, but it just kind of tells you what the liquidity is like. Like the bids are just pulling out of the way. Look, 882, 639 to trade 25. Almost no hesitation whatsoever for them to trade into new prices too. Okay, iceberg at 25. Feds Williams webinar hasn't started yet, of course. Jeez. Okay, so gets sucked back up pretty easily. So even though it looks like it's really easy for them to push lower, it's still like really light liquidity, very easy pullbacks. I dare you even say quite dramatic pullbacks. That one seems quite dramatic to me. Nihilism might be helpful if you blow your... No, I don't think that that would be useful in that situation. That would make things worse. Don't become nihilists, people. I'm just saying nihilism doesn't... from my own research, nihilism doesn't seem to be very good for your mental health. Bitcoin is puking. Oh, is it gonna do it? They're not quite there. They're not quite to yesterday's lows. Bitcoin making me a little bit excited here. I really shouldn't be excited because my 401, like my 401k and my stock market account is probably getting obliterated today. If I blow up my account, a couple of FCMs will be in trouble as well. Well, it would be because, yeah, I bet it would take something really crazy to do it, right? Well, that's the thing that just bothers me with all of these, like, these kinds of more professional strategies is that what they really involve is like, go and find the most low risk thing you can possibly do and then lever it up to the moon. So if it fails, it really does like destroy that market. Like you read it the other day. Oh man, if you didn't read this, there was a story on Zero Hedge last night about when China's top copper producer asking for a bailout. That really perked my interest. I don't know if that actually turns into anything, but that was definitely like, what's going on there? So what I'm getting at the moment, those guys that went long in the treasuries, they didn't puke on that push lower. They're hanging on. Of course, this is probably all dependent on what we get from Feds Williams, right? Which is still about 10 minutes away. Chinese traders in cupboards as old as the 1970s when the term Dr. Copper was coined. Yeah. Well, copper's not been doing so hot lately, so when I saw that, I was like, well, maybe that's why copper's falling. It's because these guys have some big copper position on that they're having to puke. Can you believe that they're already 39.70 in the S&P 500? It feels like it was only actually it was only about 15 minutes ago that we were at 40K. That's a really ugly downturn. Well, maybe we actually are seeing some flight to safety movement in the treasury now. Oh, what? Cuts not under discussion right now, reports TASS for OPEC. Perhaps if they were discussing cuts, then oil would be rallying right now, and it would probably make the move in the treasuries even worse, wouldn't it? VIX should be a lot higher. Well, that's probably a good observation, huh? So does that suggest that investors are just eating the downside? Or is it that they're not trying to hedge it, they're just straight up selling their assets? Okay, so there was a little bit of downside movement, but I'm starting to get the signs at 28.5 there a little bit. And on that one, 536 and strong offer. Flow is getting a little difficult to read in this area. Because it just goes, right? Look at that. Right back down to the low of that range. I guess it's only a 4-tick range, but look, jeez. Jeez. What about 26? I mean, look, it was like only 150 contracts each of those steps, too. Where would VIX be if SPX drops 1.5% every day for the next 60 trading days straight? Are you kidding me? AshK, don't say things like that. That's a scary scenario, man. I think that the VIX, the price of the VIX wouldn't matter because they would shut the markets down at that point. I still think back at that. Hey, good morning, Jacob. You're late. You missed all the fun. I still think back on that COVID, and I am kind of like, they really were close to shutting the markets down. Like, it had to have been under discussion, right? Like, if Congress hadn't have been able to make a deal when they did, that was the question I was asked when I interviewed for my job back in the day, and it has 3 different answers. Yeah, well, so, I mean, if it was going down that much, we should be able to say that VIX is supposed to be a month, right? So it would be 1.5 times 45 or something like that, right? Would be high. But I think the answer is that the market would probably break well before that. In other words, if you were taking some trade expecting it to really continue all the way through, you'd get screwed over by the government coming in before that. You're in a fun Euro short? Ooh. Okay, so I'm going to have to leave you guys soon. Feds Williams will be speaking at the top of the hour with a live question and answer event with the Wall Street Journal. You can watch live. I will give you guys the link. Live begins in 4 minutes. So I'm going to give you guys the link here. And I'm going to shut down a little bit early. I think I'm going to hold through it, but we'll see. It's making me a little nervous. Yeah, I'm long yield. I should have I really screwed this up, to be honest, because I was like, hey, well, it looks like we're getting some short and it looks like it's based on the news. So I think maybe 3.8 would be not too bad. And I didn't touch it. And like by the time I was looking at it, it was like 3.1, and 3.1 has kind of been my trigger point lately. So then that was finally when I got in. So mistakes were made. But I'm hoping that Williams says something hawkish. I'm gonna be a little careful though, because I'm starting to wonder how much of this flow is hedging ahead of him. So I don't want to. Theoretically, 1.5% drop for 60 days straight implies a VIX of 24. Okay. So 27 is out in the stratosphere. That's interesting. I'm going to go back because I don't know the exact numbers. I think that you want to look at the number of trading days in the month, right? So is it like 1.5 times 20? Gets you to like 30. Something like that. Okay, hey. I will catch you guys tomorrow. Stay safe. Don't blow it all here. This is a very volatile market. Be careful about where you enter. And I'll see you tomorrow. In the meantime, stay excellent, team. I don't know how I feel about this new outro, but I feel like it fits more in line with what we're trying to do. So stay excellent, team. All right, you're doing a good job. Good stream today.